Good evening, everyone. My name is Qiwen Wu, and today I am presenting my 2026 stock pitch on ASML Holding NV, one of the most important and strategically powerful companies in the global semiconductor industry. Let's start with who ASML is. ASML is the world's leading supplier of advanced semiconductor lithography equipment. They design and manufacture the machines that are used to produce silicon chips, and importantly, ASML holds a monopoly on the extreme ultraviolet or EUV lithography systems, the most advanced chip making technology in the world. No other company is currently capable of producing EUV machines at commercial scale. These machines are required to manufacture chips at 5 nanometers, 3 nanometers, 2 nanometers, and even future advanced nodes. This means companies like TSMC, Samsung, and Intel, the world's most advanced chip makers, depend directly on ASML's technology to remain competitive. Now let's look at the stock information. As of the latest intraday quote, ASML trades at approximately 1,470 per share. Its market capitalization ranges roughly between 430 billion and 546 billion dollars. Depending on exchange and reporting source, the 52-week range is approximately 578 to 1,493, showing significant price appreciation over the last year. The company trades at roughly 37 to 48 times earnings, which reflects strong profitability but also indicates a premium valuation. The dividend yield is modest, around 0.6 to 0.7%, signaling that ASML prioritizes reinvestment and growth. Financially, ASML generated approximately 9.7 billion euros in net revenue in the fourth quarter of 2025, with a gross profit of about 5.07 billion euros, reflecting a gross margin above 52%. That margin is extremely strong for capital equipment manufacturing. Additionally, the company repurchased approximately 1.7 billion euros in shares during the quarter and launched a new 12 billion euros share buyback program through 2028, signaling confidence in future growth and strong cash generation. Now let's move into valuation. Using a discounted cash flow model, I estimated ASML's intrinsic value. I used 388 million shares outstanding, most recent revenue of 32.67 billion, net income of 9.61 billion, and free cash flow of 12.69 billion. I assume a growth rate of 15% over the next 7 years, followed by a terminal growth rate of 7%. The discount rate used was 10%. Based on these assumptions, the intrinsic value per share is approximately 1,719.6, implying about 70% upside from the current price. Even with relatively conservative discount assumptions, ASML appears modestly undervalued given its long-term structural advantages. Now let's examine the industry. The semiconductor equipment industry is experiencing strong structural growth. This growth is being driven by three major forces. First, artificial intelligence and high-performance computing. AI workloads require advanced GPUs and custom accelerators, which require leading-edge nodes that depend on EUV lithography. Second, automotive and smart technology. Modern vehicles contain hundreds of chips for automation, battery management, and driver assistance systems. As cars become increasingly autonomous and electric, chip demand continues rising. Third, government and global investment. Countries are heavily investing in domestic semiconductor manufacturing capacity for national security reasons. Programs like the US CHIPS Act and similar initiatives in Europe and Asia directly support new fabrication plants, and every advanced fab requires ASML equipment. Now let's discuss competitive positioning. ASML's moat is extraordinarily strong. Switching costs are extremely high. Once a semiconductor manufacturer installs ASML machines into a fabrication process, switching it to another supplier would require redesigning the entire production flow, which is practically impossible at advanced nodes. Barriers to entry are massive. It took ASML decades and tens of billions of dollars in R&D to develop EUV systems. No new entrant can realistically replicate this in the near future. The threat of substitutes is essentially non-existent at leading-edge nodes. Suppliers have limited bargaining power because ASML orchestrates a complex but coordinated global supply chain. Customers also have minimal bargaining power because they have no alternative provider for EUV. In terms of competitors, Canon and Nikon are the primary traditional competitors in lithography. However, they focus primarily on older deep ultraviolet or DUV systems and broader imaging technologies. ASML invests over 4.3 billion euros annually in R&D, significantly more than Canon or Nikon allocate specifically to semiconductor lithography. Canon and Nikon diversified their R&D across cameras, optics, and other segments. ASML, in contrast, concentrates almost entirely on advanced lithography. That focus creates technological depth and leadership that competitors have not matched. Now let's analyze financial performance. ASML has demonstrated strong revenue growth and high profitability. The company maintains strong net earnings, efficient operations, and a strong, solid liquidity position. Its gross margins of about 50% reflect pricing power and technological differentiation. Free cash flow generation is strong, enabling both reinvestment and shareholder returns. Importantly, heavy R&D commitment ensures continued innovation and long-term competitiveness. Now let's briefly discuss ESG considerations. ASML has committed to net zero emissions targets, increased renewable energy usage, supply chain decarbonization, and improved energy efficiency in its manufacturing processes. The company has received top-tier ESG ratings and sustainability recognitions. While ESG is not the primary driver of the investment thesis, strong sustainability performance reduces regulatory risk and enhances long-term resilience. Next, let's look at ASML's technology timeline and roadmap. Timeline. ASML's UV systems enabled the production of over 1 billion 7 nanometers chips by August 2020. These systems powered 5 nanometers production and later enabled 3 nanometers volume production beginning in late 2022. The enhanced 3 nanometers, known as N3, improved yield, power efficiency, and process performance. Looking forward, high-NA EUV represents the next major advancement. High numerical aperture EUV will allow even smaller feature sizes supporting 2 nanometers and beyond. EUV offers high patterning fidelity, shorter cycle times, reduced process complexity, and better yields. These improvements directly lower cost per vapor and increase throughput for chip makers. Now let's move into the core thesis. Thesis one is ASML's strong business model. ASML is a pure play lithography company. It does not design or sell chips. This means it never competes with its customers, sorry. Instead, it enables them. Customers like TSMC, Samsung, and Intel rely on ASML's tools to build their most advanced products. This creates alignment rather than competition. It also produces recurring service revenue, long-term contracts, and deep integration into customer operations. Thesis 2 is advanced technology leadership. ASML's EUV machines are essential for advanced node production. Without ASML, 3 nanometers and 2 nanometers chips would not be possible at scale. The company holds a near monopoly position in the segment. Its innovation-driven leadership is sustained by massive R&D investment and decades of accumulated expertise. Next, let's discuss risks. First, valuation risk. The stock trades at roughly 35 to 40 times earnings, which is historically elevated. If growth slows, some compressions would occur. Second, semiconductor cyclicality. Demand for advanced nodes can fluctuate depending on macroeconomic conditions and capital spending cycles. A downturn in fab expansion could temporarily reduce equipment orders. However, despite these risks, ASML maintains strong contracts, long-term customer relationships, and disciplined risk management. Its backlog visibility and strategic importance reduce downside risk relative to typical semiconductor equipment companies. To conclude, ASML sits in the center of global semiconductor value chain. It enables the world's most advanced chip production, maintains extraordinary competitive advantages, and generates strong financial performance. With intrinsic value estimated at approximately 1,720 per share, and continued technological dominance through EUV and high-NA EUV, ASML represents a high-quality compounder with structural growth potential. For these reasons, I recommend investing in ASML. Thank you.